Hello, I'm Peter Walton from Zenith and I'm talking to you today about your investment portfolios. The reporting season in Australia finished recently and it's the time of year where we complete one of our major reviews. The result of the reporting season was mixed. As usual, some companies did better, some companies did worse. There's really not a lot of takeout overall. What about in the rest of the world? There's still a fair amount of fear in the US that they might have a recession. And most recently, it appears that their interest rates are going to stay higher for longer, possibly even a further increase. That sort of news tends to put a brake on the share market. In Australia, we tend to follow the US to a large extent, and the most recent view is that our interest rates are likely to stay reasonably high for the foreseeable future as well, which is keeping our share market in place also. In other parts of the world, in China, there's a fair amount of opinion that China is entering a slowdown period. And I think there is some substance to those stories. And one way or another, if China slows down, it's not good news for Australia because they're our biggest customer with our exports. Of course, the war in Ukraine continues with no end in sight. It's appearing more and more like a war of attrition over a long period of time. There will be a resolution, but it is hard to pick what it is at this stage. As far as the portfolios go, we have a fairly pessimistic view regarding property, or at least commercial property and retail property, not so much housing prices. And so our portfolios are generally underweight in the property sector for the time being. Our investments in equities, being in Australian shares and overseas shares, is fully invested and we remain reasonably confident at the time. Fixed interest investments, we were underweight for quite a while, but we're now back to our normal weighting in terms of the preferred allocation to that area. If interest rates do, in the not too distant future, ease off a little bit, that tends to be positive for things like fixed interest funds that hold bonds. As the interest rates go down, the value of the bonds goes up. It's an inverse type reaction. So we have made some changes to the portfolios as a result of the our review. And those changes are relatively minor, not being any major movements other than the ones I just went through. So please feel free to log on and have a look at your portfolio to see the changes that we've made. And if you have any questions at all, please feel free to contact us. We hope to be in touch again soon. Thank you.